Hello, welcome back to Eagles FS. Let me show you one of my favorite trading strategy. It is called trend reversal trading strategy. I use this strategy every time I'm trading any financial instrument. But before we go to the chart, I want to give you some illustrations. So let's watch closely. So this strategy is basically you cashing price at a reversal point. So for example, on a bullish trend, what do I mean by bullish trend? When market is going up, what do you use to know that market is bullish? Is market will keep creating higher high. This HH mean higher high, okay, and higher low, okay. So whenever price come and take out this higher high, that means the price is bullish. It's going up. You can see it. It take out this higher high, created new higher high, and created a new higher low. So market keep moving in this series. You see it another higher high, another higher low, another higher high. This time around, price came and closed below this higher low, signifying that there is a shift in this trend. That means this entire movement has shifted from uptrend towards downtrend. So, but we do not take trade immediately there's a shift in market structure. We allow price to return back to internal range liquidity. Okay. Now, after price has taken out this higher low and took out all the liquidities here, all these liquidities are called external range liquidities. What are liquidity? Liquidity is money. These are where stop losses, stop orders are put. So price came and took it out. After taking out this external range liquidity, price will reprice back into the internal range liquidity. And what are the internal range liquidities that we'll be looking at for here? Number one is your fair value gap, your order block. Okay, so these are areas that you allow price to come into this zone. So when price come into this zone, we will now take a sell towards bearish trend. So let's look at a scenario for when price is in a bearish momentum. So price will keep creating lower low. LL means lower low and lower high. LH means lower high, another lower low, another lower high, another lower low, another lower high, another lower low, and price took out this lower high. How do you know that price has taken out the lower high? You wait, let price break and close above the lower high. Let price break this zone and close above it entirely. That's when you know that yes, that the price has closed above it. So at this time around, all you need to wait is to allow price to return back from this zone. Let it return back to internal range liquidity. Okay, look at fair value gap somewhere here, or you look at your order block at the bottom here before we now take our buy towards bullish momentum. So this is how we'll be taking this approach. So let's go to chart and look at where this is placed at. By the way, what I'm using to show you this thing is GBP USD. That's the chart I'm using to show you this now. So pay attention. Let's start from this zone. So initially this price was coming down. You can see from this zone, this price was coming down, coming down, coming down. And when the price get to this place, price start going up. So let's work from this zone. This is what my favorite trading reversal strategy. This is my one of my favorite. I love trading because we are cash it at the peak or at the bottom. So see what happened here. Price was going up, starting from this zone, was going up. This is a mini trend, was going up, creating this high, okay, higher low. You can see it, higher high, higher low, higher high, higher low. It couldn't create another higher high, and price break and close below. So this is the higher low that price has break and close below. I hope you see it here. So I highlight it. Just as I explained to you, you do not trade immediately price break below this zone. You wait for price to return back to internal range liquidities. So what are your internal range liquidities here? Let me highlight it. So let me remove this and show you the internal range liquidities. You can see your fair value gap somewhere here resting. And mind you, this your internal range liquidity must fall inside premium area if you want to sell. Okay, if you want to sell, it must fall inside premium. So this is the internal range liquidity. You can see it. This is a fair value gap. There's a fair value gap here. There's also another fair value gap. There's also this fair value gap here. This one. Price didn't touch it. So use this first one and reverse. Okay. So price from this zone, price start coming down, forming lower low, lower highs, forming a series of lower low, lower. So let's walk you through on this one now. So after picking up from this internal range liquidity, this fair value gap, price start falling down. You created a lower low by breaking here. We break this zone, created a lower low. We went back again, use this massive fair value gap. And whenever you have a massive fair value gap like this one, you use 50% of it. Place your trade at the middle of it. This one is called consequence encroachment. So what happened here is that we use the consequence encroachment and created another new lower low, and we'll go back again and use this other block. This green count is other block, and use it, and price rally and break below this zone. You can see it break below this zone. Let me put it so that you've seen this things clearly. Price break below this zone, okay, and created a new lower low. This is a new lower low now. This is a new lower low. This place is a new lower low now. After creating this new lower low, price return back to this other block. You can see it, this place. Price, this is the other block. Price return back to this other block and drop. Okay, as it's dropping, price created another lower low here by breaking this zone. You can see here, price break this zone, okay, and created a new lower low. Where is the new lower low? This is new lower low here. This is, after creating this new lower low, price could not retrace back to this zone immediately, and price started coming in this format, lower high. It couldn't create lower low and higher high. At this zone, we have another trend reversal. Are you seeing what I'm showing you? By breaking this zone, this lower high, by breaking and close above it, you have another trend reversal. So from this zone now, price start moving up. So after breaking and closing below it, what next do happen? Price now retrace back into this other block. That's what I'm telling you, that after taking out the external liquidity, price will return to internal range liquidity, which is your other block or your fair value. See, this red count is the other block, and price come back to it and price move up again. After moving up, it break and close below above this zone. You can see it. After breaking and closing above this zone, price return back to this fair value gap. Let me highlight it. There is a fair value gap here. Price return back to this fair value gap and use it to move up. Okay, and price continue in this direction. E break above this zone and return back using this fair value gap. I hope you are seeing it clearly. So basically, this is my favorite trading strategy, my favorite smart money trading strategy. Price return back to this zone and continues like this till currently. See where price is now. Let me show us so that we can even take advantage of the price action. You can see that price took out all the liquidities here from this zone. Price took out all the liquidities. After taking all the liquidities out here, price return back to where? See fair value gap here. Let me show you. Tiny fair value gap. Let me show you. So basically, this strategy will give you 80 to 90% winning rate. See the fair value gap here. If it's this only strategy that you are trading in your forex industry, you'll be profitable. See fair value gap. Price has returned back to this fair value gap and rallies up again. And currently, price has taken out this external range liquidity. You can see it here. Price has taken out this external range liquidities here. What next do you expect? Price will still return back to reprice into internal range. But if you look at this zone now, there's no fair value gap from here to here. There's no fair value gap. Okay, so probably price will come back to this zone again, forming double bottom. So let's see what will happen. But I will advise you to go what? Go to your chart and practice and practice and practice. When you master this practice, start executing it, and you'll be profitable in this forex industry. So if this is your first time coming across my channel, kindly subscribe to my YouTube channel so that you'll be getting series of content that I'm dropping every now and then. I also have my first Telegram channel where I drop one or two signals every week. See you guys in my next episode. Cheers.